Okay, for this video, I want to go over a TurboTax Schedule C tutorial. And specifically, we're going to be looking at a taxpayer that runs a furniture store. So as far as what we've got in front of us here for this video, we've got one slide here with some background information on the fact pattern that we're going to be working with. And then we do have the financial statements for John's company. So we've got a profit and loss statement and a reconciliation for his cost of goods sold, his inventory amounts. And then in addition to that, we obviously have the TurboTax software itself. So this is the online version, TurboTax Self-Employed. And so we're logged into John's account now. And so we're going to go ahead and enter the business activity for his furniture business. So let's go back to the fact pattern first, go back to the slide, and then run through kind of what we're going to cover in this video, and then some of the high-level financial details on his entity. So what we want to talk about, what does it mean to have a trader business, or is it a hobby or a personal activity? We'll go through the Schedule C itself and the other items that need to be included with the 1040. So you're also going to need Schedule 1. We're going to need Schedule SC for self-employment income. So we'll take a look at those. And then we're going to talk about things like 1099Ks, miscellaneous, NEC, 1099 NECs for non-employee comp, and what you kind of need to be mindful of when you're entering the information into the return. So first things on the fact pattern, right? So John Q. Taxpayer, he's a part-time sales agent. And so he lives and works in Florida. And so he does get a W-2 from that job, right? He got $12,000 of income during the year, so he got a W-2 for $12K. And then also during the year, he opened this furniture store, right? So he's trying to make it a full-time job, but right now it's just part-time. So the furniture store is being conducted under this LLC set up in Florida. So he set up John Taxpayer Furniture Sales LLC. And this is very important element here. The LLC is a single member LLC, meaning he's the only owner. And it's a disregarded entity for federal tax purposes, right? So the LLC is not an S Corp, it's not a C Corp. And so for those reasons, the activity is simply reported directly on John Taxpayer's personal Form 1040, right? If this was an LLC that made an S election, we would need an S Corp return. If it was an LLC that made a C Corp election, then it would need a Form 1120 corporate tax return. Okay, now the first thing to kind of highlight here is that John is going to treat this as a trader business activity. And why is that important? Well, if you are actively engaged in running a business and you are doing it for the pursuit of profits, you can generally be characterized as a trader business. The reason why that's important, because if you are not doing it for the pursuit of profit, if it looks like it's just a hobby, then the hobby loss rules come into play. So hobby activities are reported differently, right? They're not reported on Schedule C, and you're also not able to deduct losses from hobby activities. From trader business activities, you can. And so that's why that's really, really important. Before you start entering stuff on Schedule C, ask yourself, okay, do I have an actual trader business or do I have a hobby? In John's case here, he does have a trader business. So he's got some sales for the year, $32,000 and change. Cost of goods sold, right? So that's the inventory sold to customers throughout the year. He did get a 1099K, right, for $30,000 of the revenue that was realized from credit card transactions, right? So credit card and debit card transactions, the payment processor sent him a 1099K, and then the other extra income there was just cash sales. And so he's going to have to complete these various schedules. Schedule C is the starting point. And then he does have a profit for the period, so he is going to owe some tax on the earnings, and that's okay, right? So if we look at his net income or loss per books, he's got about $1,000 of profit for the year. So we'll see how that flows through to his return and ultimately is going to be subject to tax. All right, so the first things to start with are in the wages and income section, we want to go to self-employment, income and expense, and we'll go ahead and add the activity, right? So a lot of these are just yes or no questions and prompts, and it's important to obviously answer these as accurate as possible because it drives what kind of additional forms or schedules you might need to complete, right? So in our case here, we do have self-employed income and expense. And so we're going to enter what kind of activity. So we're just going to say, furniture store, furniture sales. Okay, and how you enter that is they're going to try to think of maybe what industry you're in. In our case here, no, we're not in furniture making, right? We're just buying furniture wholesale and then reselling it, right? So, and that's different, right? Because your cost of goods sold, various expenses are going to be different if you're actually making the furniture rather than just purchasing it as inventory and reselling it. So how does this activities fit in big picture? For us, it is a business. It does say, pick more than one if it applies, but in our case, it's just a business. I suppose it is a side job. It's certainly not its main source of income. So we'll just leave it's a business for now. Does the furniture work have an official name? Yeah, so we do. We do have an actual LLC set up. So if we look at John Taxpayer Furniture Sales LLC, so I'll go ahead and enter that there. John Taxpayer Furniture Sales LLC. So that's good. Do you use your home address for it? Well, we do use our home address for kind of banking and mailing purposes, but he does have a separate actual location where customers walk into the store. So you can use the same address. That would be fine. When we take a look at the Schedule C, you'll notice that I suppose it really doesn't matter so much. But in our case, we're going to head and enter the actual address where the showroom is, right? So where is his actual business located where he sells to customers? So we're going to just come up with a fake address here. Let's say he's in St. Petersburg, Florida. Okay. Okay, so how long have we had this business up and running? Well, we did start it in 2022, and the start date was on February 15th, 2022. So we entered the start date. We did not stop during the year, right? So we're still in business. So started during 2022. That's the start date. That's fine. Did we pay any employees? No, right? So if we look at John's financial statements here, for the business, you can see the expenses. We've got some advertising costs, contract labor, insurance, legal fees, office expenses, rent, taxes, and licenses. So no employee wages there. And that's because, John just started this business. He's doing everything himself. So no employees yet. Ideally, John certainly wants to hire employees in the future, but he's got to build up the business a bit, get some more sales. So 1099 payments, right? So if we made payments to any one individual more than $600 during the year, you likely have to report that on a 1099 NEC. So that's a 1099 for non-employee comp. In our case here, that does not apply. We had some contract labor, but not enough to any one person. Okay, so we do have our own EIN. So every LLC generally should get its own tax ID number. You need it for tax forms. And you also need it to open bank accounts, right? So let's just say this is the EIN assigned to the business. Okay. Tell us if any of these less common situations apply, right? I didn't actively participate. I'm subject to Department of Transportation hours of service limits or none. In our case, none, right? The active participation one, this is really important, right? Because if you don't actively participate in the business operation, then it's potentially a passive activity to you. And passive activities have different rules, right? There's things like passive activity loss limitations. There's rules about offsetting passive activity income with other types of passive activities. So in our case, no, right? We actively participate in this business. We're the sole owner. So none of those apply. And then DOT hours of service limits don't apply to us either. Okay, so now once we get through that initial couple of questions, it's going to provide us a summary here of what we've entered. And it does ask us information to confirm at the bottom. So we are a cash method taxpayer. We're not going to do the accrual method. So we'll go ahead and confirm that. And then it's asking us if we have any assets in reservations or qualified disaster areas. A lot of this is because you might be eligible for certain types of tax credits or other relief if you have a business located in these areas. But in our case, none of these apply. So review all the options, check them if they do apply. If they don't, just indicate none. Okay. All right, so now that we have that all done, everything looks good here. Go ahead and click on the looks good. And then now we start to enter information on the income and expenses of the business. Now we can see here at the top, this is where we start to enter the income from the business, but a lot of it is depending upon how it was reported to us. So if we look at our financial statements here, remember the total furniture sales, the gross income is $32,090. And remember in our fact pattern, John received a 1099K for $30,000, right? So he had $30,000 worth of credit card payments. All the other payments were just cash payments, so people that walked into a store and just paid cash. So all of it is gross income. All of it has to be disclosed. But you can see here how 1099K reporting, you can enter this separately, and then all the other income that wasn't reported on 1099s, you could enter in the other self-employed section. So if we start here, for example, if we look at our 1099K, it's going to ask us information on the filer. So who is the merchant that sent us the 1099K, right? Who's processing these payments for us? So if we just enter the information that you have on the 1099K itself. In this case, we're just going to make up the information, right, from a fake merchant company. Then we can see 30,000. Let's say that was reported, and then federal income tax withheld. There shouldn't be any federal withholding, but in some cases there might be federal withholding if you didn't provide correct information. So you could have something which is called backup withholding, right? So backup withholding would mean that the credit card company here, rather than process these payments and give you a full amount, they have to withhold tax because you maybe didn't provide correct information on the W-9 or something to that effect. So in our case, let's say no federal income tax withheld, so that's fine. Go ahead and continue on through. And so here we have our first entry. We have our $30,000 in gross sales that was reported on a 1099K. Now it's also asking us here, do we have any more income to add? In our case, yes, right? We do have some extra income that wasn't reported on the 1099K. So if we look at the next section here, other self-employed income, notice it says cash and checks, right? And that's us, right? So we have cash and check payments that we need to report. So if we have a look at John's financial statements again, remember total sales $3,290, and $30,000 of that we've already recorded because it came through on the 1099K. So the remaining sales, $2,090, those are the cash sales, right? So we can do cash sales, $2,090. And so once we get this entered, now the full amount of income reported on the Schedule C is going to be $32,090, right? So that matches what we have on our financial statements, all right? So now it's asking, do we have any more of gross income to add? And no, we don't. We've entered both amounts, so we're good to go on that front. So these next screens are where we're going to start to enter the information on the expenses of the business. So it prompts us here to be able to connect our bank accounts, our credit cards, and then download that data automatically. Now that can be quite helpful, but in our case here, we're not going to need that because John has already prepared some financial statements. So instead of connecting, we're just going to type in our expenses by ourselves. And it does ask us, why are we doing that? And I mean, select all the apply. In our case, we're just going to say, look, we're already calculated all of our expenses. We track it. So we're going to go ahead and continue through. Okay, so let's gather all the expenses. Now, based on the type of business or industry you say you are in, they kind of pre-populate expenses that are going to be common in that area. Now, they don't give you the amounts, obviously, but the categories will come up. So we're going to go ahead and click through, get started here. And so we should be selecting all the expenses that we have on our financial statement. All right, so it gives us some categories to start with. So if we have a look at our financial statements again really quickly, just kind of want to run through again what kind of costs we have. So we do have cost of goods sold. So we've got inventory that we need to be tracking. We have advertising, some labor costs, insurance, legal fees, office expenses, We've got some utilities there, rent, right? The location rent, and some taxes and licensing fees. All right, so if we go back to the software, let's just go through the list and then check off the items that we know we're going to need to be entering. So we do have some advertising costs, legal and professional fees. We did have some of that. Some office expenses, I think we have, and then it gives us some less common items here, drop down list. We do have taxes and licensing fees, that's fine. We do have insurance, utilities, yep, we need that. So we're going to go ahead and click through, go to the next pages, see if we can, what else we might need. So definitely here we have building rental, right? We are renting a space. Health insurance, long-term insurance, nothing there needed. Inventory, yep, we do have some inventory. We do have contract labor payments, right? So contract labor payments to non-employees, right? So that's good there. And then other miscellaneous expenses. Do we have anything like that? Let's see. Office expenses, utilities, rent. I think we've already checked off all the stuff we're going to need. If it turns out that you skip one, not a big deal, right? When you go to enter the expenses, if you notice something is missing, you can obviously just add new expenses, right? So we're going to continue on through. And now it's going to give us a nice little prompt there saying that maybe there's some stuff we might have missed. That's good. Always helpful, right? For suggestions. There's nothing wrong with that. Do we have any startup costs, right? So no, we didn't incur any significant startup costs, right? All John did was pay the state to set up the LLC, and that was it. Vehicle use for work, no, right? If you did use your personal vehicle, you might be able to write off the mileage, right, at whatever the mileage reimbursement rate is. We did not have a home office. Let's go ahead and keep going. Okay, so now based on the items we selected, it gives us these expense categories, right? And so basically you just click on each one, enter the amounts, and then go forward from there. So if we look at our financial statements again, the first one that we're starting with is the advertising cost. So we spent $120 on advertising. So if I go into the advertising here, click the start button, and then you can be as descriptive as you want here. Now on the Schedule C, a lot of these categories are already going to be pre-populated, so it's not as if anything you enter here would actually really show up on the tax return itself. And when we look at the Schedule C, you'll see what I mean there. Okay, so advertising cost was $120. Go ahead and enter $120 there. Continue on through. And then we'll just go on to the next one. So the next one is contract labor, $605. So we'll go into our contract labor, $605. Okay. Let's see. And the next one, insurance, $360. All right, business insurance. $360. Legal fees are next for $500. Legal fees, $500. Office expenses of $240. And then we have utilities for $960. Utilities. So that's $960. Rent, $12,000. Go ahead and enter the rents. Building or land rental. It was $12,000 for the year. And then I think we got one more left, right? Taxes and licensing fees, $250. So So we'll go taxes and licenses there, 250. So do licenses, let's say, business license 250. Okay. So we've got all of these expenses entered here. Now we need to figure out how to get our cost of goods sold numbers entered, right? So cost of goods sold is the inventory that's sold to the customers during the year. So because we're a new company, right, our beginning inventory is zero, right? We didn't have any inventory at the start of the year. Purchases are the inventory we purchase. Cost of goods sold are the amounts that were sold to the customers during the year. And then ending inventory is what we have left over in our shop at the end of the tax year. So at December 31, 2022, $9,000 worth of inventory remains. So now go back to the schedule and we'll start entering the inventory information. So we do have inventory to report, right? And it gives us some businesses that commonly have inventory. We know we have inventory, so yeah, we do have to report inventory. Did we use the cost method to value inventory for the furniture work? Yes, right? So cost method meaning that we're tracking the value of the inventory based on what our purchase price was for the inventory, right? So yes, go ahead and continue on through. So beginning of the year, our inventory was zero. And at the end of 2022, remember our inventory was $9,000. So if I go back to the inventory screen, $9,000. Continue. Cost of purchases, right? So the cost of purchases here was $25,000, right? So across three different types, right? Couches, chairs, tables, $25,000 of purchases during the year. So I'll go ahead and enter that, $25K. We don't have any other inventory costs here. Go ahead and continue. And so it should tell us what the computed cost of goods sold is for the year, right? So there's our sales. Cost of goods sold is $16,000. Gross profit is $16,090. And those amounts do reconcile with our profit and loss, right? So cost of goods sold, $16,000. Gross profit, $16,090. All right, so go ahead and continue on through there. Now, all the expenses and all this stuff has been inputted. Income has been inputted, right? We don't have any other uncommon situations. I suppose you could start this. Actually, let's go start it just so we can talk about some of the issues that don't apply in our case, but we'll discuss them nonetheless. So check all the situations that might apply, right? So if this was a second year or later business, if we took 179 expense in the prior year, but we had a limit on it because we had losses, let's say, you might have a carryover amount. In our case, no, there's no carryover amounts. No PAL or passive activity loss issues because, again, this is nothing being carried over from 2021 because it's a new business. And, again, we actively participate in this business, so we don't have passive activity loss issues. No business assets disposed of. No money invested that I'm not at risk of losing, right? So none of the above here. Go ahead and continue on through. So we can close out that screen. Okay, so we close out the uncommon situations screen. And here we have the taxable income from the business. So $1,055. And that does reconcile with our net income or loss per books. Now, they don't necessarily match all the time, right? If you have expenses that create what are called book to tax differences, then you might have a variance there. So one common example are meals expense, right? So meals expenses are generally 50% deductible. So you might deduct the whole thing for net income or loss per books, but for tax purposes, you can only deduct half. In our case here, he didn't have any meals expense, so those aren't going to apply. Okay, so here's again another summary here. We've got income. That's the gross profit amount, right? So our gross income net of cost of goods sold, the total expenses, and then the net taxable income from the business. Okay, go ahead and continue on through. How much of the furniture work took place within the United States? Well, all of it, right? Our store is in the U.S. We live and work from the U.S., and all our customers are from the U.S. Was any of this work for a former employer? No. Do you have deductions for furniture that you'll claim elsewhere? No, it doesn't apply to me. So we can click continue, double check everything. So let's see, run my free check. Audit assessment, Audits are rare no matter what score you get. That's true, right? You can file with any score. We're here to help make sure your info is accurate. So this is, I suppose, helpful, right? Just kind of TurboTax's assessment as to whether or not our audit risk is high given the information we entered. It's telling us our risk is low. I guess that's good. Okay, so let's check your self-employment tax. You can increase your refund and reduce your tax by checking for more expenses, right? So yeah, I suppose that's true, right? The more expenses that you add, the lower your taxable income, you're going to owe less self-employment tax. But in our case, we've entered all the expenses that we're legally allowed to take, so we're not going to be making any adjustments to that. All right, so now that that's all done, let's have a look at the return itself. So let's do a print preview here. We'll look at the schedules and have a look at, okay, we'll do all the worksheets, get everything. Okay, let me zoom in here so it's easy to read. Okay, so here's our 2022 tax return. John, taxpayer, single filer. You can see here on line 1A, those are his wages from his sales agent job. Remember that he had a W-2 for that income. But then what's really important and what we're focusing on here is his Schedule C. So Schedule C, 2022, profit and loss from a business. So we can see here, he is the proprietor, so he's the taxpayer, he's the owner of the entity. The business name here, it is a separate LLC, so we got John Taxpayer Furniture Sales LLC. The address of the business and the EIN for the business, right? We can see the accounting method, it's a cash basis taxpayer. And items G and H, right? So G, very important, right? We did materially participate in the business, yes. And that's important because that is going to mean it is not only subject to self-employment tax, but we don't have passive activity issues. So it's not a passive activity. It's an active business for which we materially participate in the business. Question H, right? We did start the business during 2022. Right, and then the 1099 questions, we didn't make any payments that required 1099 reporting. So we can see here in parts 1 and 2, just the income and expense information that we entered, right? So we have our gross sales, $32,090, the cost of goods sold, the $16,000, the cost of goods sold number is flowing up from page 2 of the Schedule C. So if we look at Schedule C, page 2, part 3, cost of goods sold, we have cost basis, is the method to value a closing inventory. And then we can see the reconciliation here. Beginning of the year was 0 for the inventory. Purchases, $25,000. The ending inventory number is 9. And so that means our cost of goods sold for the year was $16,000. Right, and then we have the other expenses, right? Advertising costs, contract labor, insurance, legal and professional fees, not home office, just regular office expenses, rent, right? So other business property, there's our $12,000 in rent, taxes and licensing, and then utilities expense. And so our tentative profit loss here is the $1,055. And again, that does reconcile with our net income or loss per books. Now the activities are subject to self-employment tax, so there should be a Schedule SE included as well. Notice here that we have the net profit or loss from our Schedule C business, $1,055. And then the worksheet computes the amount of self-employment tax that we're going to owe, as well as the amount that's going to be deductible for the business, right? So because we're self-employed, we pay both the employer and employee portion of the payroll tax, but you can still take a deduction for 1/2 the piece that is attributed to, let's say, the employer portion of the taxes. So the total self-employment tax that we're going to be owing here, the line 12 amount, so $149. And so if we scroll up to Schedule 2, we can see here the self-employment tax that's going to be owed with the return is $149, right? And so you'll see this reported on your Form 1040 as well, page 2. So we can see here in the tax and credits section, the self-employment tax coming from Schedule 2, There's the $149. And then the amount of tax that John owes on his actual income, right? Just the regular federal income tax, it's only $2. And why is that? Well, it's because his income was low, right? He had $12,000 in W-2 wages, and then the amount of self-employed income from his business was only $1,055. So when you look at his total income, $13,055 after the QBI deduction, after the deduction for the 1/2 of the self-employment tax, and then after considering his standard deduction, $12,950, he can get his taxable income down to just $24, right? So that's why the self-employment tax, again, not a sizable number, but certainly much more than his actual federal income tax liability, right? So $2 plus the 149 is 151 in total taxes owed. Right? Okay, so that covers it for this Schedule C tutorial. I hope that was helpful. If you have any questions, please feel free to leave me a comment below. Happy to answer any questions I can. And I look forward to seeing you again on the next video. Thank you.